Alright, so the best strategy to approach funding companies, and the way I do it, is you need to think of prop firms as basically a business expense. So you are investing an amount of money in order to gain an asset that produces you money. So if you, let's say, invest in 5 challenges, 5 100k challenges, and then let's say you only get 2 funding accounts, so 200k, your investment will be, let's say, 5 times 5, 2.5k, and then you're gonna be left with 2 funded accounts, right? And then once you start trading on them, let's say you get the first payout, you make 0.5%, so you're not trading much, you just want to get the refund. So let's say you make 0.5%, which is $500, you are left with $800 plus $1,000 in refund. So now your investment only is $700, which means you have to do another month with 0.5% to recover all the investment. So it maybe takes you like, let's say, 2 months to pass the challenge and then get 2 payouts to basically have the assets. So the mentality and the mindset needs to be that you need to gain as many assets as possible. So as many funded accounts as possible. That's why I went for such a large capital, because I realized funded accounts are an asset that basically produces money over time. So I'd rather invest my money into buying some challenges, and then trading the challenge very aggressive. So the way I trade challenges is usually phase 1, that has an 8% target. Let's just take the standard one. I usually risk between 2 and 3%. Usually I like to risk 2.4%, so that way I can have 2 losses in a day. So I risk 2.5%, and depending on the setup, I either try to go for the full target, so 8%, which is basically a 1 to 3.5, or I just, if I don't have a lot of confidence, I will just go for 5%, so 4%, so half the target, right? And then if I take a loss, then the next trade I'm taking with 2.5%, I'm trying to go break even back again. So that would mean a 1 to 2 risk reward. So that way I can easily pass phase 1. I have around 4 trades to take, which is very aggressive indeed, but I like to take these trades with high probability setups and also having a bigger stop loss. So I will not take a 2.5%, 2.4% risk trade with a 5 pip stop loss. Not gonna happen. Usually gonna use, if I take a trade on EURUSD or GBPUSD, I'm just gonna use a 15 pip stop loss, or even a 20 pip stop loss. And I'm trying to only take trades when I'm taking a challenge during New York. So only New York, because I know New York is gonna have a bigger move, so there's no point in taking a trade in London, knowing that basically the big move that I'm aiming for is gonna happen during New York. So that's the way I do it. So it's a very aggressive approach, but if you have the money to invest, go for it. Even if you don't have, let's say you only have $500 to invest in challenges. Instead of buying one single 100k challenge, better buy 5 20k challenges. And try to get at least 2 of them funded. Or 3. Right? So just go through them. Don't trade the same setups on all the challenges. You just go through them, because realistically you only need around 2 or 3 wins in a row. 3 wins in a row to pass the challenges. So you can either go for this, or usually what I do now, because I prefer trading the live capital, I just go with 4.5% risk. So I have 2 trades to take. I wait for the best setups, and basically first win, I'm just going for phase 1 pass, which is a 1 to 1.8. risk reward. Pass it, and then phase 2, I just go again with 4% or 3% risk, aiming for that 1 to 1.8, somewhere around there. So I only need 2 wins in a row to basically pass a challenge, which is great, right? Because if you have proper higher time frame setups, like the way I showed you, it's easy to pass. So let's take, for example, today. This is how I could have passed a phase 1 account. So market is bearish, coming towards the low. You have a huge retracement coming into London Open, right above the 1.09 level. You expect a retracement, enter around here, have a 15 pip stop loss, go for that target, and then that's phase 1 passed, right? Because you basically risked 3%, 4%, and you made the first phase. And then this is the way I managed to pass even the MyFundFX fund account. I passed it in 1 day. The same way I did a 4.5% risk, phase 1, passed it, got the credentials for the next phase, and then, for example, I would have taken this reversal here. So after we took the low, I was waiting for buys, because we took liquidity, right? And then same thing, pass phase 2 in just 2 trades. So I found that it's best to go like this instead of doing the traditional 0.5% risk or 1% risk. Most mentors recommend even going 0.25%. I don't think that's a good idea, because just imagine making 8% in a month to pass the phase 1. That requires you to take a lot of trades with 0.5% risk. It does help you become consistent, of course, but I think it's best to look at this as investment. So if you lose 2 or 3 accounts out of the 5 challenges, that's not an issue, because you get the funded accounts, which was your goal. And then with that funded account, you can go down to 0.5% or even 0.25% and go from there to start increasing capital. That's the first approach. That's the approach I use. Of course, there's the approach where you can go for no time limit funded company, like Bespoke or Funded Engineer. And of course, you can take trade to 0.5%, trade for 60 days or 50 days or however it takes you to pass first phase, and then another 30 days to pass second phase. But then it takes you such a long time. It takes you 3 months to get funded, which really, this is not our goal. Our goal for you guys is to get funded as fast as possible, because the real game begins when you have the assets that start making money for you. And from there, it's very easy to scale, because let's say you invested, like I said, 2.5k in 5 100k challenges. You passed 2 of them. You recover your money in 2 months, in 2 payouts. So even 1 month, actually, with just making 1%. So that's not a lot. And then you're left with, let's say after 2 months, you're left with 200k in capital and your money back, which is your initial investment, which is 2.5k. And from there, you can go multiple ways, because you can invest the 2.5k again in 5 challenges, which, let's say, you pass again, you just pass 2, or let's say you pass 1. Uh, 100k funded, and then you lose the other 4. So you're down a lot, right? But because you're still trading the live accounts and you're just targeting 0.5% or even 1% every single payout. So next payout comes in, you make 1%, which is 2k minus the profit split. Let's say you get $600, right? And then you also get your first payout of 0.5%, so you make initial $400, and then you also get your $500 back. So see, now you have your money back, you have the investment back, you're break even again, you have the 2.5k, but you also have 300k in capital now, right? And then you can go again, you can buy 5 challenges, And now let's say you pass 2. So now you're down 2.5k, but you now have 500k in capital, which by passing these challenges, you also get another payout from your 300k. So you make another 1%, you make 3k, that's plus 2.4k, right? Which basically gets your investment back. And then you also get the first payout, 0.5%, which is again $800 plus the refund, 1,000. So now you start to make profits because you scaled the account so much, you have now 500k in capital, and even if you make 0.5% every single month, you can start gaining that cash. So you get your investment back. You have more than that. You have how much is that? 2.5, 3.2. You have 4.2k, and then you also have 500k in capital. That's, let's say, after 4 to 5 months, which is great, right? Because from there you can start scaling again, or you can just take 1 or 2 months off to just trade the live capital. So let's say you take the next month to make capital, you make 1% in a month, which is very easy to achieve on the 500k capital. So you make 5,000, which is around 4,000 for you profit. Now you have 8.2k and 500k in capital. So now let's say you want to scale again. So you buy, let's say you buy 3 200k challenges, or let's say you buy 5 200k challenges, which is around, I think the pricing is around 5k, somewhere around there in the market. So let's say again you pass 2, which is a good rate. So now you have already another payout coming in. So next month 1%, which is 4,000. So you make an additional 4,000. Right? You lose the 5k, so you're left with 3.5. So you still have 3.5. Your total now, your balance is around 7,200. And now you have also 700k in capital. So next month you make 1% again, which is, this is really like bare minimum. You make 7k, which is again for 5 profit for you. So now you're already around above the 10k mark. So you're around somewhere around here, profit in your bank. But the most important is your assets, which is your capital. So in 6 to 8 months, you can reach this level if you follow like step by step what we teach you. You can really reach this level within 6 to 8 months. You can have around 700k in capital. You have your bankroll, which you can start investing more, or it'll take 1 or 2 months to just trade. But the way you approach the funding companies is the most important thing, because if you approach them with this mindset, which is to get the funded account as fast as possible, so you don't care about the investment, you invest in 5 challenges looking to just get 2 funded accounts. So you're not looking to pass all of them, you're just looking to get funded as fast as possible so you can get more aggressive. Because if you have 5 accounts, then you basically need to take like 10 losses in a row to lose all of them. So we're not going to take 10 losses in a row. So that's why it's best to have multiple accounts instead of trading one account for a month or 2. And then you get funded on it, you get your payout, you get your refund. And after 2 or 3 months, you have 100k in capital and you have your investment, which is $500. And then it's very hard to trade that 100k account because you want to withdraw. So the mistake a lot of people make is they focus on one account. So they go for like a 100k account. And then they want to trade that, but once they hit, let's say 1% profit, that's not enough for them. So they keep trading it and then they end up losing it. But this way, because you have multiple accounts, you cycle through them. So you trade the first 100k account. So let's say you have 7, this was more, actually, this was 900k in capital. That's my mistake. So almost 1 million. But let's say you have the 500k in capital, 5 100k accounts. The way you do it is you trade one account at a time. So you don't link them, you don't do anything like that. your risk, so you have 5 100k accounts. You risk 0.5% on first account, and let's say you make 1% profit. You leave it there and you wait for the withdrawal. Next account you risk 0.5%, but let's say you take a loss, so you're minus 0.5%. You keep trading that account until you reach either 0.5 or 1% profit. So that should take you like 2-3 more trades, and then you're gonna have, let's say, 0.5% profit. And then you move on to the third account. Again, let's say you have a good trade, you just win it. So you just have, you need 1 win per account. And then again, fourth account, you trade it. Let's say you end up going into a little bit of drawdown, 3%, and then you come back and again you have 0.5%. So you keep going on like that, and then if you have around 1% profit every single withdrawal, so every 2 weeks on 500k, that's 4k for you. So in a month, that's 8k. So that's the real true way to manage funding accounts. It's best than just linking all accounts together. It's best than just merging all accounts and having one big account to trade. It's just best to have multiple accounts and then cycle through them in this way. So you have low risk, low profit, but because you have so many accounts, you cycle through them. If one account you take, let's say 15 or 20 losses in a row, you just lose it. There's no big deal because the next trades are probably going to be wins. So you make profit on the other accounts. The goal is to withdraw as often as possible, as little as possible, and then just use that money to keep buying accounts, to keep increasing your capital. So that's the true way to approach funded accounts.